Hey, what's up, everybody? It's Monday, July 18th. I hope you had a nice weekend. How's everybody doing? All right, let's talk about what's going on. We had a market pullback today. I'm going to speak about that in a minute. Actually, not all that surprising because we now have made a number of attempts at the upper level of resistance of this trading range that the market is in, and I would say that the 3,900 level on the S&P, if you look at the S&P futures, you know, we made a couple of tops up there. We were pushing up against it again as of Friday. Couldn't punch through, so the market got hit with some profit taking. Wasn't a whole lot of new. I mean, I would say the news today was mixed. We had good earnings on Goldman Sachs, but Apple said that they're going to slow hiring. So I mean, I guess you could read into that really whatever you want to read into. I think the selling today was kind of like, I call it like reflex selling, just because now, you know, that has basically been the norm for the last 5 or 6 months. We have seen rally selling. And that just doesn't dissipate like overnight. That doesn't like immediately disappear. You're going to have that behavior until it's no longer there. Now, Friday I said that based on what I am seeing with the fiscal picture, we have improved dramatically from the environment that we have been in since mid-April. And that continues to be the case. I'll just give you some more numbers here. On Friday, we had a net positive flow once again. And that was, to me, a surprise because we also had on Friday, it was a pretty big tax flow day. In other words, government collected about 20 billion in taxes, but we had about 24 billion in spending. So we still had a net addition of 4 billion, which, look, I find that to be very encouraging. I mean, remember back in June, I was talking about how all the days, with the exception of Social Security payment days and first of the month are the big payment days when you get, you know, Medicare, Medicaid, military pay, veterans benefits, all that stuff. I said only those 5 days were days that we were going to see positive flows. And that's actually in June, kind of the pattern that we saw was the days that did not fall on those that I just mentioned. We saw negative flows or liquidity drains. But now June is shaping up to be pretty good. I mean, Friday, like I said, we had a net flow, positive flow of 4 billion. Now this puts the deficit for July up to almost 135 billion. We are now just 48 billion below recovering completely the April tax drain. All right, the April tax drain was 325 billion. We've made everything back now, or everything has been replaced in terms of that liquidity, that money that the government sucked up. Everything has been replaced with the exception of 48 billion, and that's going to go pretty quick. On Wednesday, we have a Social Security payment, and the last Social Security payment on July 13th, it was a net 25 billion addition. So that's going to cut it right down to, you know, what, 23 billion, and that doesn't even include, you know, what the flow was today and what the flow is going to be tomorrow. So we're really close, and that's why I said on Friday, I said, you know, you got to play the long side of the market now, even notwithstanding what happened today. I know some of you are going to say, oh, you see, it didn't work because it didn't. Mike, you see, you're wrong. It didn't work because it didn't happen exactly the next day. So that's wrong. I don't play that game, folks. You know, everything I do here is macro based. And so, you know, I understand, as having been a trader for a long time. I was a trader on 4 exchanges, a floor trader. I mean, if you want to talk to me about micro, second, minute by minute, second by second movements, I played that game for years and years on 4 different exchanges. All right, I don't. I'm gonna, I view everything now as a macroeconomist and more or less as a longer-term investor, and I base everything on these fiscal flows. So yeah, we had a pullback today. Look, the market was up over 600 points on Friday. Once again, we pushed up against some overhead technical resistance, some levels that have been a little bit of a challenge before. So that's reflexive trading. That's just like, they didn't see it punch through, so it's pulling back a little bit. But again, I look past that. I look to the macro picture. I look at these flows. And I've been saying all along, I mean, you can go back to April when I was saying that, look, we just had a massive drain. And everyone could understand what I'm talking about from a personal financial perspective. When April 15th or whatever, April 18th comes around and you got to pay taxes, I mean, you feel that when you got to write that check to the government. Now, many of you maybe get refunds, but that April 15th tax day, and remember, we got hit in April, and then we got hit again in June with the quarterly corporate tax payment. And throughout this period, I've been saying to you guys, that drain has to be recovered before we can stabilize and start to move up again. And we're very, very close to having that happen. Again, we're only 48 billion down now, and that could disappear this week. Again, Wednesday, we're going to get like a 25 billion net flow from the Social Security payment. And so that's going to reduce it down to, 23 billion, not even counting whatever happened today and whatever's going to happen on Tuesday. And then we got the rest of the month. Today's the 18th, so we still have, 13 days left in the month. How many business days is that? We got, 5 days this week, and then basically, so 10 business days left. And we'll be back. And then, I've been telling you guys about August. August, we get a quarterly interest payment. That's about 45 billion. So we're going to be looking good all the way into mid-September when we get another quarterly corporate tax payment, and then we're going to get into all the budget wrangling in Congress and see what they're going to do there. But I like what's happening right now. We're in a positive mode despite what you saw happen today. You got to look past that. I mean, I've said in the past that we're no longer in the kind of environment that we've gotten used to over the past 2 years. And by that I mean, the environment of massive COVID-related fiscal stimulus, like one after another. I mean, we're not in that environment anymore. We're back to what I would deem to be like a normal fiscal, like a pre-pandemic fiscal environment. They're actually better than that because pre-pandemic, and I've said this to you guys, we were running, federal government was running at about a 420 billion, 430 billion monthly flow. We're running now about a 575 billion, 580 billion monthly flow. The deficit has come down a lot, again, from the pandemic deficit levels where we were close to 3 trillion. So now we're, 845 billion. We might squeak out 1 trillion. So that was a big reduction, and that's what the economy has been adjusting to. But all it means is that it took some time to establish a new equilibrium level, a new support level based on the magnitude of the flows now. And again, we got hit big time in April with the taxes. We got hit again in June with the corporate, and it took time to recover all that. just takes time to recover all that. But we're there. We're practically there. So stay focused. Don't, I mean, one day's move does not change anything. Stay focused on the big picture. Stay focused on the numbers that I am providing to you. They're not going to let us down. These are the things that, this is the thing that drives how the economy is evolving. And again, it's a big change from what we saw April, May, and June. It's a positive change. It's a good change. So take the opportunity when you get pullbacks like this today to use that as a buying opportunity, or like I said on Friday, if you have short positions, if you have defensive positions on puts, inverse ETFs, I would use days like today, I would take that as an opportunity to close out those positions and reverse them to the long side. I think you'll be happy that you did that, but just give it some time. I mean, this is it doesn't just turn around on a single day, but we should see some progress. I'm very, very certain we're going to see some progress, and I think we will see the mid-June highs, and I don't have those numbers off the top of my head, but the mid-June highs eventually should be hit, and then we should exceed those. So that's the update for today, folks. So let's follow it, and please like and subscribe. See you tomorrow. Bye.